To the game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. All right, into the action we go. As we go over to the big board here, we got to take a look at the market blast. All right, keys to trading. What's going on today? What are we looking at? Let's get right into it. 3M reported earnings while beating guidance. The guidance was weak, all right? So that's key right there. So they beat on the top line, but the guidance again was weak. Stock, last I checked, was down about 7%. GE beat on earnings and revenue, guidance a little bit on the light side, same kind of deal. Stock's only down, last I checked, about 1.5%. UAL, United Airlines, beating nicely. That stock is trading up about 6 to 7% on the day. Continuing down here, we have China. This was big news in the overnight, guys. China talks up massive stimulus, including potentially buying equities. The Hang Seng stock market jumps 2.5% in the overnight. Stocks like Alibaba and Baidu are trading higher this morning. Speaking of Alibaba, Jack Ma announced he is buying more shares, or he's rebuying Alibaba stock. Basically, this is an insider buy. The shares of Alibaba are jumping up over 5% on this news. And lastly, the Fedwatch tool has gone from pricing in 6 rate cuts in 2024 to just 5. And again, that's very important. Speaking of that, let's take a quick look at the Fedwatch tool. This was what we saw yesterday, right? So again, let's revisit what we saw yesterday. This is why I pay attention to this chart, the Fedwatch tool on the CME website. You have 1 rate cut right here starting in May. Remember, that was a change from just Friday. We went to a May cut. All right, then we look at the next one, the next one, the next one, and the next one, and the next one. 1, 2, 3, 4, 5, 6 rate cuts. Now, let's refresh the page. This was from yesterday. I'm going to refresh it. Let's see what we have. Look at what things have changed here. Let me go back to probabilities here and flip that over. There we go. So take a look at this, guys. What do we have now? The Fedwatch tool is now showing. Look at this. 1 cut here, still in May, expected. Then another, then another, then another, and then another, and then another, right? So 2, 4, we're still around that 6 cuts. But again, last I checked, in fact, just a little while ago, it was down to 5. They pushed back up a little bit, back to the borderline of 6. But look at down here. These percentages for later in the year are getting very low. 38% chance, 34% chance in December that we could see a rate cut. So ultimately what we're seeing is the market is again starting to say, wait a minute, we were pricing in 6. It was supposed to start in March. Now it's May starting. Yes, we're still saying 6, but the probabilities later on, these are a no-brainer, right? This is right here, 50% right here, these first 3. Then we start to go to 47%. Then later in the year, 38 and 34%. In other words, there's almost a bigger, in fact, there is a bigger chance that we don't see cuts there. All right, couple other things I want to go over here, guys. Let's look at earnings from this morning. I kind of went over them already in that pre-market market blast, but just take a look at this, guys. So Verizon, look at this. This is what I'm paying attention to. This says growth, okay? So this is revenue, growth, minus 0.3%. 3M, minus 0.8%. GE, minus 10.8%, right? RTX, yes, is good. There. But then also down here, Johnson & Johnson, minus 9.7%. So my point is, again, that we're starting to see a lot of these companies, while they're beating earnings, there's somehow, whether it's cost cutting from firing people, laying off people, or just other cost cutting, we're seeing that revenue year over year on some of these bigger names is starting to decline. That's something I'm going to pay attention to later in the day when we get Netflix earnings as well as these other earnings out there. I want to see ultimately if this becomes a trend. Are companies dropping revenues lower and lower? Remember, I've said this for a long time. Apple has been one. Year-over-year revenues are declining at Apple. Yet the stock, again, they're artificially promoting their stock. They're buying back stocks, we're buying back shares, which artificially inflates their stock price because it lowers their PE ratio. And again, that's something that Wall Street has done. It's a little bit of a shady tactic, but it does help them kind of mask a slowing consumer, if you will. Now, just what I want to show you before we get into some basic charts here, take a look at after the bell today. What earnings are we looking at right here? After the bell, we have Netflix. Netflix again reporting after the bell, Intuitive Surgical, Texas Instruments, Steel Dynamics. Those are basically the names you've probably heard of. In all fairness, these first three will be the ones that I am looking at. During trading the close today when I'm on, maybe we'll see those Netflix come out live, those earnings come out live. All right, let's flip on over here, guys. So I want to quickly flip over to the charts and get right into the action here. The first thing I just want to bring to your attention is the NASDAQ 100 chart. So I've talked about, and I showed you guys this chart yesterday, how the NASDAQ or the tech sector is the only index that is making new all-time highs, even though the whole entire market has made new all-time highs. Not the Russell. Let's be fair. The Russell has not. But the reasoning is you have, again, the Magnificent Seven making up over 30% of the S&P. Throw in some extra semiconductors that are big companies like AMD, and you all of a sudden have like 40 to 50% of the S&P being technology big players. That is lifting this. But look at this. This is what I'm paying attention to right here, guys. We have a negative divergence. So here's your previous high. Here's your current level on the QQQ. Look at this high right here on the RSI, this lower high. You have a lower high while you have a higher high. That's called a negative divergence. It doesn't tell you exactly like today we're going to roll over. It doesn't give you that information. What it tells you is that there's distribution going on here. There's bigger money starting to unload. All right, there's factors that are coming in here that are starting to kind of sway things to maybe potentially telling us whether it's a week or a couple weeks or a month that we should ultimately start to see a fall in the overall tech sector. So keep that on your radar. It may coincide with earnings. By the way, insider selling has accelerated. This entire, from basically November, December into January, we've seen big time selling. In fact, Mark Zuckerberg, look it up, he unloaded like $500 million, if not more, might have even been more than that, of Meta stock. All right, couple other things. Let's take a look at 3M. 3M is collapsing here pre-market. Look at that drop. We're now below 100, trading at $99.20. Let's take a look at the daily and see if there's a tradable level today. So the daily 3M, we can see it's actually been on a decent run, right? So we've had this nice move up, a little bit of consolidation. So it's not like it's at a crazy extreme, but at the same time, you could almost make a case that it was kind of into resistance right over here, right? Right in this vicinity right there. Now, the stock, again, is falling sub 100 to about $99 and change. Is there a level down here that we can monitor for a trading opportunity? To do that, I zoom into my chart and kind of look really closely at potential levels here. So here we are zooming in. Now, I go to around the current price of 99 and I look at what levels are in that range. In all fairness, right here, not a whole lot, right? Right around 99, we're below this little pivot, we're below this little pivot, so that's not telling me a whole lot. There's a little bit of support right here, is a little flat line, but not enough to get me interested. The next level, and this is a potential day tradable level for me, would be this little pivot high right here. Now, it's not a great one. I'm going to be honest with you guys. It's not a great one. You can see the bigger picture on the chart here. But nonetheless, I would say around the 97 Pierce level, there might be a little bit of support. Will I take a trade here? I'd have to find a second factor, all right? Probabilities are big here. It's a level, but it doesn't have, at least what I'm seeing right now, it doesn't have a secondary factor to it. Factors are important, guys, because again, if you have one factor, your success rate in trading or investing is probably going to be 65%, 60% in that range. Better than 50-50, but I want to get my probabilities up to 75, 80%, right? To do that, you're going to have to find 2 to 3 factors in a trade before you execute that trade. And it doesn't mean, remember, still 75, 80% still means 2 to 2.5 trades out of every 10 will go against you and not be correct. All right, so that's what we see there. If I zoom out here a little bit on the chart and just kind of look in that same realm, I do see a couple better levels that I'll be looking at. So one, there's a gap fill right here and a secondary gap fill right here. So in between this level here and this level here, this is your zone, right? So basically right here would be my zone. It looks like it's anywhere between $94 and $92 per share. So if 3M drops there, now we're talking about a pivot point, as well as other support going back over here. We now have multiple factors. All right, let's keep going because I got a lot of charts to talk about today, guys. GE initially flushed on earnings. It has come back. It's only trading down about 1 to 2%. When a stock is trading 1 to 2% down, honestly, I couldn't care less. It's done. It's not volatile. Volatility is how a trader makes money. Volatility. If the volatility is not there, now it was here, but now that it's come back to the flat line, unless during market hours we get a lot of volatility, it's off the radar. UAL again flipping to that intraday chart. We can see again up nicely yesterday after hours. They reported yesterday. It's been going sideways around $41. Is there a level on this one? Let's take a look. If we zoom in on the chart, what do we have here? Let's take a look. So we're above this 39.75. There's a wide range bar. Gap window would be 42.50 right here. That's your first level right there. Second level, which would be the best, but unlikely we hit it today, would be about 44.50 right up there, all right? So again, right up in those ranges. So you have level 1. This one might get hit today. And then level 2 probably won't, but if it did, that would be a huge level. Major extended move into a key gap fill. All right, on to more charts. Let's keep the charts rocking and rolling here. A couple other things to go over. Microsoft, take a look at Microsoft. This is a big trend line on the daily chart that I'm focusing on quite a bit. Look at this trend line here, guys. If I zoom out, look at that. So you're going all the way back to the COVID lows, right through here. Kisses here, but really hits right here. We haven't hit this yet, but it's just above $400. The level to me looks like around 402.50. Now again, 402, 403, whatever it may be, that to me is more of a swing trade. When you get a trend line that extends back, 2, 3, 4 years, that becomes a swing tradable level when it's at these high levels. The other thing I'd want to do here is, and I haven't looked at this recently, but let's bring up the RSI. Let's see what the RSI is showing us here. Is there a negative divergence forming here or not? Okay, so let's zoom in on this. And the answer is not really. No, not really. You got a flat top. You got a flat top divergence. That's a middle ground divergence. So basically what you see here, I apologize, you can't see that. There we go. So basically what you're seeing here, right, is you have this high over here. Bear with me as I draw. That's equal to, that's equal to, that's equal, right? So again, there are levels of divergences, and the best divergences are crystal clear, downsloping here versus upsloping. Those are your strongest divergences. When you get a flat top, like if this was the RSI right here, and I apologize, that's a little bit off. Let me just do that again. Let's do a flat top, right? So up, 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 up. And you have price going up, that's still a divergence, right? Price is still going up here, okay? But it's hitting at the same point here. That's what I would call a mid-grade divergence. It's not as good as a full-on, negative divergence, if you will. But again, it is a mid-grade divergence. Just a little bit of a tip there. So does that mean anything? Well, it just means that for me, it's not a big factor. Like it's nice to see if I have enough factors, if I find a factor here with the trend line and other things. Let's say we get a topping tail or an engulfing candle, something like that. But again, I wouldn't rely purely on this as a trade factor. Okay, let's keep going, guys. Let's jump through here. We have the Nvidia chart here. Amazing run on Nvidia, guys. I would have never dreamed it in 100 years. Then again, when we were back in 2021 and Tesla had the run that it had, I said the same thing about Tesla. I was short both stocks, ended up making money on Tesla. I'll make money on my short on Nvidia. That's not even in question, in my opinion. What I love to show people is if you just go back on Nvidia, if you go back here, guys, and I'm going back on the daily chart, remember that Nvidia was trading at $350 here, right? And that was even before the crazy hype. Look at the run it's had, but it went all the way back down to basically $100, $120. So these type of corrections are not too abnormal. Think about the run that it's had now. Where's that corrective move? And if we do a percentage drop on this, let's do that right now. So this was a percentage drop, a retrace of 68%. Basically about a 618 Fibonacci retrace, we'll call it, right? So let me just take those away again so we can see it. So there's your drop there. And so if we just do that same sort of thing, 68% drop on this. Now, a lot of you guys may say, oh, that's crazy. But to be honest, it's not crazy. Look at Tesla, right? Tesla was what, $400, went back to $100. That's a 75% drop right there. But basically, you're talking about this potentially coming back to $180, $190 a share when the bubble, the AI bubble that we're in explodes. And this does happen, guys. Go to every bubble. The internet stocks, look at Cisco Systems, look at Amazon, look at all of it. By the way, Amazon dropped over 90% when the internet bubble collapsed. Now, again, you might say, well, the AI is here to stay. Well, the internet was too. There's no difference there, right? So you have to just understand is that it's human psychology that pushes these things to ridiculous levels, and then it's competition and margin contraction that ultimately brings things back from these ridiculous moves. Now, again, could this go to 650? Sure, could. But then again, you're still going to get your big pullback at some point in the next 6-12 months, in my opinion, as that unwinds. All right, Netflix reports earnings after the bell. Let's go to that chart real quick. One of the things I'm watching on Netflix, guys, there's a gap that has not been filled. Maybe it'll be filled going into earnings. Just to show you real quick here, there's your gap here. We've come close a couple times here and here. We have not filled it. It's around 515, all right? So 515, 517, that's a little bit of a gap fill. That's going to be a level where I would be surprised if it doesn't hit either intraday today or on earnings. Doesn't mean it won't, but I'm just saying I will be surprised. If we get a monster beat on Netflix earnings, your max upside, I have it penciled in here. There's a pivot point right in this range. I would say $570 upside. If it fails, and let's say there's a big drop to this, you know where this thing could go? The downside target right here, this trend line, this longer-term trend line right here, you're talking about 440 to 450. That would be your downside target. So again, we have to see this gap fill today. I saw pre-market, we were up about $10 on this. Can this push up and fill the gap? I think the gap is actually a little bit lower, around 510. Let me just get that actual price for you here. It's actually 507. So if we fill the gap at 507, it becomes much more of a 50-50 which direction that goes. All right, guys, back to center screen real quick. As we come on back, I got my mini little football here, but let's take a quick 5, 10, 15, 20, 30 seconds to thank iTrust Capital, and then we got to go into Bitcoin's chart. I'm going to do GDX. We're going to look at gold, oil, other cryptocurrencies. Here, watch this first. I'll be right back.
Do you have an existing IRA or retirement account? iTrust allows you to buy and sell crypto, gold, and silver all right within your IRA. And the best part is, they make it simple. All you have to do is transfer your preferable amount of USD through iTrust, and then invest that into crypto or precious metals on the platform. To get access, use the link below to find out more about investing through iTrust Capital.
All right, guys, back into the action we go. Take a look at Bitcoin. Everything I've predicted on Bitcoin right now is coming up spades here, coming up beautifully. We are approaching my $38,000 target. Remember, this was very simple. The chart had the blow-off top right up here, right? We reversed. We then came down. We settled on this beautiful upsloping trend line right through here, all through these levels. Bear flag formation. Remember, I went over those flag patterns in that video. We talked about as long as it's a 45 to 90 degree angle, that's bearish for a move down. Look at that. Picture perfect right there in terms of education. It then broke down, and we are now approaching our next target price coming right back from here. Classic TA here, and totally simple TA. All I'm doing is drawing trend lines. I don't have any fancy, crazy stuff on the charts, right? Now, again, once it gets to 38,000 or give or take around 38,000, it now becomes a little bit more intriguing. Can it hold 38? Can it bounce back to 40? That's actually my guess. My guess is we bounce back to 40-ish, maybe low 40s. We then will have to see what happens at that point. Very possibly, and this is how charts work. Remember, here, let's do a little diagram, right? It's support, 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 break. We hit our next support level, and we bounce back to the scene of the crime before continuing down. So if you look at that, we kept on hitting support, 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 break. Here's your target. Where would a bounce likely take us? Back to actually about 43 to 44,000. Now, again, there's no guarantees that happens. It could flush right through 38,000. But again, I go with probabilities. And by the way, just to make the announcement, because I think I do feel, or at least I should make this clear, and I already posted it on Twitter, but I did cover my Bitcoin short. We made a beautiful score on this. I still remember the ribbing I took from so many, you know, what do you call them? Like just these uber nutty job bulls on crypto that just don't understand charts and they just go with emotion. Emotion will make you lose money in this game. All right, now, am I a huge long-term bull on Bitcoin? Yes, I am. Absolutely. I think it's the digital gold of the future. Doesn't mean it's not going to go straight up forever. You get opportunities to play shorts and then play longs and then play shorts again. You can still have your hodl position, but you got to trade the charts. There's so much money to be made by doing this, and you guys can see it before your eyes. And again, there's been people out there, they're like, oh, it's astrology for men. Hell yeah. I'll just keep shooting for the stars like Elon Musk and reading those charts, if that's what it is. So in any case, the beauty of it is it's profitable. That's all I care about. Call it anything you want. But we know that, again, Bitcoin is nearing that key target. Okay, now let's look at some other cryptos here. I saw a request on one of the comments. As I say, guys, I do read the comments. I appreciate all the kind words. You guys seriously warm my heart every single day and motivate me to crush it in these, so thank you. But if we go quickly to the Ripple chart, someone was asking me about Ripple. This is a problem for Ripple, right? Ripple has this long-term upsloping trend line. It's a beautiful trend line. The problem is Ripple is breaking this. And again, remember, I couldn't care less about Ripple. I'm not a bull. I'm not a bear. It's just the chart. The chart right here, we are below. Now, granted, we haven't confirmed, so maybe it can find its way back above, but we are now breaking that level. If we do break lower here, where is Ripple going? It's not that far lower, right? So again, if we look at this chart on Ripple, you see all these, like, this sideways consolidation here, 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 and here. So you're basically looking at around 46 cents right down here. So you will have some support around 46 cents. Earlier this week, I talked about Solana. Solana was breaking down. That one is just continuing to break down. Look at this drop on Solana, now trading below $79 per coin. But again, this is something I pointed out to you guys. How long can it hold this technical line? It's a door. Remember the analogy I always use with you guys. In technical analysis, you can apply it to real world things. So there's a door in front of me and it's locked. And let's say my kitten's in the house, my house is burning down, and I got to get that kitten out. I want to save that dog, whatever it may be. I ram that door once. You know, unless you're Superman, The Rock, or whatever, it may not come down first hit. But if you hit it more and more and more, eventually that lock is going to crack, the door is going to crack, it's going to break. And that's the idea here. So you keep on hitting the door, hitting the door, hitting the door, door. Now you kind of took a break here. You said, all right, my shoulder's killing me, went away. Then you hit the door, hit the door, hit the door. Finally, the door breaks. You get through to the other side, and that's where you go towards that target. Coming up to about $77, give or take, that's going to be support on Solana here. So we're actually very, very close. We're about $1 to $2, a couple dollars away from support on Solana. Talked about Cardano yesterday. Cardano, said it needs to hold this technical line on Cardano. We can see it's breaking this. Here's your target. My guess, I will even be an intrigued buyer of Cardano at this level. Now, I did take profits on Cardano with members of Verified Investing Crypto. So again, we've closed out some nice gains today, not too shabby as well. And again, folks, I still, you can't help but wonder what the people that were like, oh, you're so insane for shorting the alts. You can't believe you're shorting Bitcoin. How's that Bitcoin trade going? Oh, you must be getting killed in it. No, actually, we made money on it. And that's the beauty, again, of DCAing and slowly understanding your thesis and reading the charts. That's what it's all about. Okay, enough of the crypto for now. Let's flip over to oil. Oil continues to be in this phase of being a breakout. Even though it's having a down day today, we still have that inverse head and shoulders, so that's going fine. Let's see if it holds that inverse head and shoulders. Natural gas, basically flat today, just hovering above technical support. I mentioned yesterday I added to my position. Now, for those of you out there, and this is a good little thing, and crap, I don't have much time left. I'll do my best to get through everything. But I do trade, for me, I generally trade UNG. But remember, UNG is a ETF that tracks a futures market. It will always go to zero over the longer term. There's something called a contract rollover, right? So you have a futures market where the contracts roll over. Future contracts on natural gas are naturally higher. People assume price will go up over time. So when the UNG has to buy those contracts, they sell the current contract, which is the lowest contract, and they buy the next one. There's what's called slippage in price. So over the longer term, that slippage actually adds up to a big loss. Every ETF that's based on futures eventually goes down to zero. Now, some that are very slow commodities like gold, that will take decades, if not longer, maybe even more than decades. On something as volatile as natural gas, it happens much faster. So remember, if you're trading something like UNG, you need to be using it as a swing trade like I do, not something you tuck away in a 401k portfolio. That's very, very important. And that applies to, by the way, double and triple ETFs. That degradation, it happens so fast. In fact, I think there's a reverse stock split coming on UNG soon because price keeps going down. Look back at the history of UNG. There's reverse stock splits like every 6 months or 12 months or whatever it is because of that effect. All right, gold real quick. Pausing on the day, I did get a request for GDX real quick here. GDX again. Guys, I continue to be bullish on GDX, and just showing you guys a couple trend lines here. I have a trend line I continue to watch here. This would be the breakout level. This would be a level down here where if it breaks below, I'd be a little concerned. But again, very quickly to show this, here you go. We're coming into a wedge. We're very close to technical support. My guess is we start heading back up and eventually we break out on that chart. And URA, I know uranium's a big one for you guys. A lot of you guys have asked about uranium, so I'll try to cover it here. I will just say that we just double topped on uranium and we're getting the normal standard pullback, right? This is technical analysis 101, just right through here. There it is, double top. Notice the pullback on uranium here. And again, that's super normal. For me, if I'm really looking for a good entry, I'm probably looking at a technical level that's somewhere in, I definitely wouldn't be a buyer until we get into the 2770 range or so. And then if it breaks this trend line, you got to step aside right away, right? So again, it's pulling back off double top. It's almost a gap fill. Right here, support. If that breaks, exit because you could go all the way back to this level right in here, right in here. All right, now that would be where I would be more interested, to be honest. You come back to this level here, that is an awesome retrace. I don't know if it'll go there. I'm not saying it will. I have no clue, but I know where I am disciplined enough to be patient to buy it. All right, guys, back to center screen. Holy cow, I'm running late here. I got to get to the live trading room. Check out Verified Investing, guys. And again, we're merging in the money stocks into Verified Investing. My services will be all there. You guys have a wonderful freaking day. Thank you guys for coming out, supporting me every single day. Take care.